We just got a new hot trade that just came across the tape, and someone just put down $1 million, but they have a profit potential of nearly 8 million if this stock goes up 13% by December expiration. So let's take a look here at the stock. And before we do, my name is Joshua Belanger, and this is another episode of Follow the Money. So the stock we're talking about here is Merck. It's MRK. This is a biotech name, and right here to the left of the chart here, we got to pop higher and kind of pull it back here. But if you take a look at the left of the chart, it really hasn't done too much. It's been choppy, and that's just with the theme of the marketplace. The market has been focused on the stay-at-home trade, the Pelotons, the Zooms, and all those types of stocks. So these biotech names have been very flat. So that's why it's interesting to see this activity, especially when it expires in just a few weeks. Now, when they put up $1 million, they're betting all or nothing, and they're putting this in the options market. So we'll take a look at that activity in a second, but that's the reason why I wanted to share this with you, because when someone buys calls, they are only looking for prices to go higher. And when they put down this amount of money, $1 million on the line, again, it's all or nothing here. So when you put that kind of money down and you only have a certain amount of time frame, that's very interesting. And the activity that we saw today was a 200% increase in calls bought over the last couple weeks. So that's why it's meaningful and why it's impactful. So let's take a look here at the option montage and the activity that we saw here. Take a quick peek before that. That happened here in the December 85 contract and also the 92.5 contract. So we'll take a look here at the time and sales. Just take a quick peek here, and you can see here these bigger trades here. This traded on the bid, and this was in right on the offer here. It was a penny better than the offer. But this big trade here, 10,500 contracts, that's a substantial trade here. And you see some other trades that came in behind it, but that's the most impactful trade that accumulates this spread that was put on here in December. Now again, they are buying the December 85 contract with prices at $81. And they had sold the 92.5 to collect some premium to offset that, and they sold it for what do we look at, about 12 cents or something on lines. So they put this spread on for about 85 cents. 85 times I have about 12,000 times it traded equals about 1 million. Now, if they are right, their profit potential is the difference between what they paid and the width of the spread. So it makes it about $6.65. Which then makes it about the profit potential if prices exceed 92.5 or close at 92.5 December expiration, which is 38 days. That's where that $8 million comes into play. So if they are right, stock moves up 13%, they can get a return on investment much greater than there. So it's a low risk trade in terms of risk to reward, where they're putting down $1 million. Now, it's not you and I putting this down. This is a institution that has a good assumption, because their business is not to lose money here. Just came out today as well is that Bernstein made an upgrade, not something that's meaningful, but they upgraded shares and they have it as an outperform. So that's not really necessarily a catalyst at this point, but it is something to consider and understand that it's something people are looking to get this, or looking at this as a more bullish position. Again, 38 days from expiration here. It's a pretty substantial bet. So keep an eye on this one. If they are right, they make $8 million. So this is the types of activity that I like to follow. This is why I follow the money. And you've seen in previous videos how it pans out typically. So keep an eye on this one, and I will talk to you in the next video. And make sure you click the subscribe button so you don't miss another episode. Talk to you then.